We're back. We're back, baby. Guess who's back? Back again. Jason's back. Tell a friend. Guess who's back? Guess who's back? All right. So, group disability income policies. Now, if I was writing a book, I wouldn't have you go from chapter 18 to 25 back to 24, only to go to chapter 19. I personally think is rude, but that's all you're going to hear from me. So, in order to continue following NAFA's outline that they put together, that I'm just breaking down. Remember, I'm flashing for you guys. iFlashForYou.com. Get your mind out of the gutter and into an insurance career. Pre-licensing. Okay, so we're in Chapter 25.321 on page 395. Now, these are other uses for disability income, but these are going to the business, okay? In the other section, we mentioned business only because we drew a comparison between the flat amount for disability income and the a percentage of earnings formula, right? Groups are always on a percentage of earnings because they don't want to give you enough money for you to not want to go back to work. Would you go back? Anyone? Anyone? No. Malingering. Tendency for someone to procrastinate going back to work after a disability, all right? So, with individual policies, it's designed to compensate you, right? That's why you get the flat amount. You are the policy owner. Everything is with the group. It's the business that is looking to protect themselves. They're looking to protect you too, but they're looking to protect themselves. Now, outside of just covering the individual or the employee, this right here, these are business continuation plans in chapter 25.3.2 on page 395. What I want you to do is I want you to highlight 321 there, the business overhead expense insurance. Okay? So, highlight that first sentence. Business overhead expense insurance is designed to reimburse a business for overhead expenses. When? When the business owner becomes disabled. Next paragraph down. Overhead expenses include rent or mortgage, utilities, telephones, lease equipment, employee salaries. Your salary as the business owner who is now disabled is not covered. Not covered. Business owner's salary not covered. What does that word say? Remember, our advertisements, the words we use have to be exact, clear, transparent. If I tell you that this policy covers business overhead, wouldn't you think all the things I just mentioned are overhead? Rent, employees, equipment. You are not overhead. Okay? Let's jump to the bottom of that second paragraph there. Business overhead expense policies do not include any compensation for the disabled owner. I swear you heard that somewhere before. That third paragraph, I'm sorry. Bye-bye. I'm not going to highlight it. It's got examples in there. You can look at it. But in the fourth paragraph, just highlight their premium. At the end of that first sentence, tax deductible business expense. When paid, treated as taxable income. Done. Okay? The next one, can we just look at the word right there? 25322. Disability buyout. Buyout. Well, we're talking about business continuation plans, right? How are we using disability income to continue a business? In the first one, the owner was disabled. The policy kicks in and allows and starts paying employee overhead and rent and lease equipment and all that other stuff, right? In the disability buyout, we have a different scenario. Why would you have to buy out a partner? Well, you better say because they're disabled, because we're in disability income. Pay attention, people. All right. So here on disability buyout in that first line, disability buy sell agreement. Next line down towards the end. The plan sets forth the terms for selling and buying a partner's share of a business in the event she becomes disabled and is no longer able to participate in the business. So we took that whole thing. Right after that, though, towards the end, funded with disability income. Next paragraph down, skip the first line, dead center of that second line. Buyout plan usually, next line down, a lump sum payment. Okay? I like that usually because, of course, we could annuitize it, meaning make payments on it. But if I was the partner that wasn't able to come back to work, don't you want the lump sum? I'm buying you out. Do you want payments or do you want all your money? That's what that is. So, of course, if you were my partner, we would have gotten to this agreement. It just happened to be me who was disabled this time around, right? So we would have picked what we wanted. That's why it's a usually there. With the buyout agreement, let's see here. Let's jump over to this next page. I'm pretty sure they talk about it. Yeah, they do. Okay, on page 396, in that second paragraph on 396, you see that first line. At the end of the first line, lengthy elimination periods. You don't have to highlight as long as 2 years. Lengthy, right? Right under lengthy elimination periods, because the plan involves the sale of a disabled partner's interest in the business. Next line down, to be sure the disabled person will not be able to return to the business. So, on a disability buyout, a disability buy-sell agreement, what we're saying here, first of all, please understand, this is a legally binding contract. The purpose of the policy is to fund buying out the other partner in the event that that person can't join the business again. Let's go back to the contractor. We own a construction company, and I'm obviously the brains of the operation, so you were the brawn of the operation, right? You can't swing that hammer anymore. You can't go. Maybe it's not about the hammer. Maybe you were the GC and you can't get out to the job site or anything. Regardless of what it is, you are no help to the business. So when that's defined and the policy acknowledges the fact that you're no longer any help to the business because of your disability, now, wouldn't that be kind of messed up if we only set a 90-day elimination period here? We built this monster company. And 90 days later, if I can't get back to work, you get to buy me out? That's nonsense. That's why the elimination period is so much longer than with an individual policy, because this is kind of a worst case scenario, is it not? All right. So that's the reason that with the buyout, what we have is a lump sum, because we already basically the elimination period, what they're telling us is like 2 years long. At the end of that 2 years, can you just pay me? Just pay me. Just pay me. Don't pay me in little bits and pieces. That would be silly. I want all my money now. Right? Could I get it in bits and pieces? I could, but that's not going to be tested. Okay? So, remember, this is a legally binding agreement. This policy attaches to the legally, it basically defines the terms and conditions. Now, if you're following along exactly with the book is going to tell us to jump over to chapter 24 real quick. I'm not going to do that. We're going to do that next. We're going to go over to page 396, and we're going to highlight 25.323, key person disability insurance. Okay? We're not talking about life insurance, so as they open up key person life insurance, blah, blah, blah. Well, we didn't discuss that, so we're not going to highlight that. I do want you to highlight indemnifies the business for the lost services of a key person. I don't think they did a good job explaining the key person, so let's pause And use me as the example, right? I'm going over this class right now. I'm teaching you the class. Like David is good with all the digital stuff and Kelly murders it on, the customer service and the CE and everything. But key person wise, I write the class, I teach the class, and I'm over here doing this charming stuff with you, right? I'm hard to replace, baby. So the fact that I'm hard to replace would make me a key person. School official, right? So if we had to replace me, that would be expensive. We'd have to find somebody with the qualifications, somebody who's able to deliver the class. And so that would obviously cause a hardship here. Now, one thing I do want to point out, just like we started out with types of policies, which is ridiculous because we started out in chapter 18 when chapters 1, 2, and 3 talk about the nature of insurance and the fact that things need to be, large and measurable, and there has to be some kind of financial loss in order for me to have an insurable interest in you. A stranger can't take out a policy on you, right? So here the key person plays such a role in the business that if they weren't there, the business would suffer. Just like the owner, key person. Business would suffer without that person. Imagine Kentucky Fried Chicken with no Colonel Sanders. Man, that place would be a mess. It'd be Popeyes. All right? So let's highlight here. We did that first line. Indemnify the business for the lost services of a key person. And then right after that, key person disability income pays a monthly benefit to a business. Right under that, when an essential person is disabled. Now after this, they go into like who the key person could be. That's not really, we get it. Key person is somebody who is important to the operation of the business. Okay, that's the only thing that's important there. You could, in the second paragraph, highlight key person's economic value is determined in terms of the loss of business income that could occur. You kind of get it though, right? I like to think I'm irreplaceable. Do you know how hard it is to find somebody who looks this good on camera and can deliver this content like this? Come on, seriously, that would be expensive. All right, so now let's go ahead and jump over to page 383. Okay, don't ask me why there's more group stuff in chapter 24, but this crime against logic was not my doing. All right, so let's see. We are on page 383. I guess we're at the bottom here. Group disability income plans. And then it's not much here, right? Let's see. Highlight the headline, and then in the second line down, highlight individual plans usually specify a flat income amount. We're just drawing a contrast here, aren't we? Right? So we're just highlighting that as a contrast, right? Because group disability income plans usually don't define themselves as a flat amount. Now, what we want here is we can skip over the second paragraph. Oh, before we do that, you know what? I missed something here. The last sentence in the first paragraph, let's highlight group plans usually specify benefits in terms of a percentage of earnings. Or you know what? Let's just do group plans specify benefits percentage of earnings. Specify benefits in percentage of earnings. There you go. Let me highlight that bad boy. Group plans specify benefits in percentage of earnings. Okay. All right. So now we can skip paragraph number 2. Let's jump over to 3. Short-term disability plans. Highlight short durations. 13 or 16, 13, 26 weeks. Benefits paid range from 50 to 100% of income. Next, we got group long-term disability plans. Right under that, highlight more than 2 years. Under that, dead center, well, just under that, more than 2 years, highlight benefit, and then center, usually limited to about 60% of income. Next paragraph down, this is a comparison, okay? Employer provides, if the employer provides both short-term plan and long-term plan, the long-term begins paying after the short-term benefits cease. Okay? So that's all we're doing here is we're just, that's it. Those are the extra little pieces there. What do we have? We have business overhead expense for disability income, right? What happens there? The owner is disabled, rent, the things that we're responsible for paying for within the business are covered by a business overhead expense policy. In a business disability buy-sell agreement, one of the partners is disabled, cannot return to work, right? So the policy provides the money to buy out that partner. The elimination period is usually pretty long, like 2 years, because you don't want to push somebody out of their business prematurely. That would be rude, okay? Usually it's going to pay out in a lump sum. I don't think that would be tested that way. And your key person, someone who's irreplaceable, okay? That irreplaceable person is going to have to be replaced, and it's going to cost you a lot of money. This policy will cover the money it takes for that business to go ahead and find that person. And now we're done with disability income. In part 2, we cover accidental death and dismemberment. Super, super, super short chapter, so we're going to be out quick. Peace.